as you know, I don't think it's all about Bitcoin. I think this whole digital asset space, whether it's Ethereum, Polkadot, Cardano, non-fungible tokens, all of these things that are developing are moving so fast that almost none of us can keep on top of it. Even the true experts in the field are struggling with the sheer amount of innovation as network effects on top of network effect and nascent projects on top of nascent project all builds into something. We've seen the explosive rise of DeFi and this astonishing new rise in NFTs and digital artwork and IP. And there's so many things that I really wants to get to the bottom of it all, to ask some of the best investors in this space, the people I truly trust, to say, hey, how are you thinking about all of this? And how can we all benefit from this? How can we really understand the future of the alternative investments that lay outside of Bitcoin or even Ethereum? Things that we may not yet understand, but we need to get up to speed on. And I want to ask them how they construct their portfolios as well. And that's going to help all of us to figure out what to do, because it is risky out there, because some projects will work and some projects will fail. But it's my fundamental belief that we're at the start of a journey of something so enormous that we can't get our heads around what is coming. We are moving into a digital metaverse where everything is digitized. All value is digitized. And many of the assets that we own and exchange are digitized. We can't yet get our heads around a world that's so different to the world we live in. A world where we become the owners of those protocols, where we can invest actually in that new system, as opposed to being a bystander and letting a corporation or a government control it to make all the money. These things are literally revolutionary. And, I think there are many narratives within the market and Bitcoin, there can only be one and everything else is a shitcoin narrative, I think is so far behind the truth, the innovation, the network effects that are going. So anyway, I got my three favorite people together. So I got Jeff Dorman, Joey Krug, and Ari Paul to take us through all of it. So let's first hear from Jeff. And Jeff is fantastic to frame this whole thing for us. Jeff, it's been a while. You've been on the platform, and I've not spoken to you on the platform for a long time now. So welcome back. Good to chat to you.
I'm excited to do this.
Listen, I'm a huge fan of what you guys have been doing. I blurt on about Arca to everybody because I think it's really interesting. So this whole piece, I'm trying to get a deeper understanding and let the audience come on the same journey of knowledge about the alt space. So kind of the world outside of Bitcoin that people are less familiar with, but is massively exciting. So first I want to get an idea of how you're thinking about this at Arca and personally.
Sure. Yeah, and it's important to know, I mean, the reason that we started Arca and the reason that we have a team now of almost 20 people, all from traditional finance. We don't have a single software developer on our team. We are all traditional finance people. We came here not because of Bitcoin, not because of Ethereum. We came because we saw all these other areas where blockchain-based assets and digital assets were taking off. That's where we saw the real value. So we love Bitcoin, we love Ethereum, nothing against that, but it really is these other assets that we're so excited about. And you'll never even hear me use the word altcoin or anybody at Arca use the word altcoin.
Digital assets.
Yeah, and the reason is it's not because we're dismissive of that term. It's that this asset class has evolved so fast that a lot of the terminology we use from 5 years ago or 3 years ago even is just immediately obsolete when you start to see these other assets grow. So altcoins made sense when it really was an industry of just Bitcoin plus a bunch of other stuff that nobody knew what it was. Now, the term altcoin doesn't even really make sense anymore because it's really different sectors and different pockets of digital assets that do different things. It's almost more like the fixed income market, right? You wouldn't say that there's treasuries and then there's alt fixed income, right? There's treasuries, there's munis, there's corporates, there's high yield, distressed, investment grade product, structured product, et cetera. It's the same thing now, right? This has evolved into so much more that you almost have to put that fixed income hat on when you think about the space. So the first thing that we do when we educate investors or when we speak about what we're doing is we say, let's get rid of everything you once knew, right? It's almost like if you come in with a bad golf swing, instead of trying to fix your swing, let's just turn you around to the other side and start over. So we think cryptocurrency is one of four types of digital assets, right? And Bitcoin obviously is the biggest cryptocurrency. You could even argue it's the only cryptocurrency of any real relevance, but it is a cryptocurrency, right? It is a macro investment vehicle. It is meant to be a store of value, potentially one day a medium of exchange, but there's no underlying asset value here. It's very difficult to model any cash flows or anything regarding it, right? It is a purely, currency. The second type of digital asset is where Ethereum falls into, and that is your protocols and platforms. Ethereum is clearly the market leader, clearly the biggest. Almost everything built in this space to date has been built on Ethereum, but there's hundreds of other protocols and platforms, right? These are other chains that are trying to do exactly what Ethereum did, right? Sometimes I think about it almost like the iOS App Store, right? If you have the iOS App Store, then you have thousands of different apps that are built on top of it. The same thing is happening, only there's hundreds of different app stores now, and all these different blockchains are being built, and ultimately developers and other projects will be built on top of these blockchains. That's a totally different category, totally different risk reward than anything related to Bitcoin or monetary policy or macroeconomics. The third type of digital assets is what we call asset-backed tokens, right? This is exactly what it sounds like. These are tokens that are backed by something real. They're backed by equity. They're backed by debt. Maybe it's backed by an income stream. Maybe it's backed by other digital assets, but it is something tangible. You can model this in the same way that you model, a debt or equity instrument using free cash flow, using dividend yield models, things like that. And there's some really creative examples of this. Most people are probably familiar or at least heard about Spencer Dinwiddie, the NBA player who tokenized his NBA salary, right? That's an asset-backed token. That's a token that is explicitly and legally backed by the income that he's earning with his contract with the NBA. So you're going to see a lot more asset-backed tokens. And again, this has nothing to do with Ethereum, nothing to do with Bitcoin. They're totally different. And then the fourth type of digital asset, which is probably the most evolutionary, if not revolutionary, is what we call pass-through tokens. These are tokens that are accruing real economic value, and they are passing through this value directly to token holders. Usually it's in the form of sort of like a hybrid security where maybe it's quasi-equity, loyalty points. Binance Coin, which I think BNB just got into the top 3 for the first time ever, that's the best example of a pass-through token. So Binance is a real company with real equity, with a real CEO, probably a real board of directors, even though it's an Asian company. And they introduced the BNB token, where if you own it, you get part utility and rewards, right? You get to use it to get discounts trading on their platform. You get to use it to get access to deals that they bring on their platform. So in that regard, it's more like a loyalty reward card. But Binance takes a percentage of their profits every quarter, and they actually go out and buy back and burn existing tokens. So in that way, it's almost like an amortizing token or like a sinking fund. So you can see how this works all of a sudden. You have the economic value created from the buybacks and burns or from the profit pass-through, and you have the rewards and discounts you're getting as a member or a customer of Binance, and you're basically putting that together into one security. So these pass-through tokens is what's driving DeFi. It's what's driving sports and gaming. It's what's driving NFTs in some way. There is a lot of other things happening in the space. And when you think about those 4 categories that I just mentioned, you can see why I draw the parallel to fixed income, right? You have these different pockets of digital assets that are only related in structure. They're all digital assets, just like all fixed income vehicles are all bonds. But ultimately, they're totally different in their sectors and in their makeup and in their structure. And that's why this asset class is becoming so incredibly interesting from an investment standpoint.
Hey, if you like this clip, be sure to check out the full interview and more only on realvision.com/crypto. It's 100% free. Sign up now.